My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey folks, welcome back. Have you ever thought how cool it would be to get your friends and your family members and people that you know all together and pool your funds to buy more real estate? Well, if you have, pay close attention to today's episode, because zooming in from beautiful Houston, Texas, we have a real estate entrepreneur, Terra Padgett, who's doing exactly that. She has created her own investment club, and together with the other club members, they are pooling their funds to do more deals. Terra, welcome to the show. Great to have you.
Hey, Dave. Thanks for having me. I'm excited to be here.
So, Terra, give us a little snapshot of what real estate investing looks like for Terra Padgett as of the beginning of 2025. Do you have some properties in your own portfolio? Is it all passive investing? What does that look like?
All of the above.
Yeah.
So I started off as a single family rental property investor, and kind of the whole concept. Yeah, we need passive income, multiple streams of income. And so, heard, passive rental properties, they're passive. Well, they're really more semi-passive. They're not all that passive.
Semi, if you're lucky, if you're not self-managing.
Yeah, right. If you're lucky, and even with property management, then you're, managing them and managing the managers. So I have about, a handful of single family rentals, and just looking at running the numbers on the single family rentals as far as projections and then actuals year to year. I started to then shift my eye towards commercial insurance. I'm like, okay, these, projected returns are a lot larger. And then when I started looking at different track records of folks, the returns, the actuals were actually a lot larger as well. So I, thought about it. Okay, I can put 50, 80K down on a turnkey rental property, or, go through the flip process and permitting and all that kind of stuff. Or I could take that same kind of 50 or 80K and deploy it into a commercial asset, have them manage it, have them sign on the line.
As an LP, do you mean? So doing
as a limited partner. Yep, as a limited partner. And just thought that was a better use of my time and capital for the same, if not a lot of times greater returns. And so that's kind of how, I started becoming a passive investor. While I still have a handful of single family rentals, I'm not bullish on acquiring too many more of them at this point in time. And so looking to continue building up the passive real estate portfolio as a limited partner, LP, and a lot of the commercial syndication deals that I'm doing currently.
Got it. All right. Very good. So when did you come up with the idea of creating your own club and bringing other people into this so that you guys could pool your funds together to take down more of these opportunities?
Yeah. So as I started looking into investing passively into syndications, almost all of the syndications require 50, 75 or 100K, cash outlay just to get in on the deal. There are some that are around 25K, but regardless of that, the first one that we were looking at that we really wanted to do was 50K investment. So there goes 50K. Okay, now what? It's like one deal. I mean, 50K is
now I got to wait.
Work.
Got to wait a couple of more weeks to replenish another 50K, huh?
Yeah, because that's all it takes. Just a couple of weeks to get another 50K going.
It takes me a little bit more than a couple of weeks, but yeah.
Right.
Good for you.
Yeah. And so I was thinking, okay, well, how can I consistently do this? Because, I understand and believe in, a dollar invested today is greater than a dollar invested tomorrow. So don't wait to buy real estate, buy real estate and wait. So I wanted to do it on a grander scale, just how a lot of people do with their single family portfolios or when they're fixing and flipping. Maybe year one, they start off with one, but they quickly want to get to, 4 and 5 and just have systems going where they're consistently buying, flipping, selling, or buying, borrowing and then holding properties. And so that's kind of the same concept that I was applying on the LP side. And so I knew that, 50K every single month for myself and a mass majority of the rest of the world is a really Mount Kilimanjaro to climb, to be able to do that. So I had the idea where I knew other family and friends, they knew that I was investing in real estate and doing the single family properties. And, now starting into the commercial side, I knew they might want it to be interested in it as well. So I started to reach out to just close friends and family saying, hey, if I can put up 10,000, you can put up 10, you can put up 5, you can put up 20 or whatnot, and we can pull this together and go into these deals, then we can, I can, and you and everyone else can do, say 10K at a time, and maybe do that 3 or 4 times a year, as opposed to one deal, 50K. Now you're kind of all right, let me get another 50K so I can keep doing this. And so that's kind of where it started. Whereas, we just did one deal and kind of like, okay, what are we gonna do for the rest of the year if we still want to keep deploying capital? And so, 50K grows the same amount as 5K. It grows the same amount as 500K. The dollar amount is different, but if your money is growing at 10, 15, 20%, 20% growth on 5K, 20% growth on 50K, 20% growth on 500K. Your money's still growing at the same rate, just different dollar amounts based on more money in, more money
So it's
out.
really a way for you to deploy your funds a lot faster instead of having to save up till you got 50K to do your next syndication as an LP. You can have 10K, save up till you got 10K, get some other people with 10K each, and then do that several times a year and get that building up a lot faster. Plus, diversify things a little bit more.
Exactly. You can do a
Yeah.
lot more deals with smaller amounts of capital, and you can diversify both against different deals, different markets, different types of real estate, whether it's single family, industrial land deals, multifamily. You can diversify across a lot, and basically you're just spreading your chips across the table across a lot of different things. And now, as opposed to walking up to the casino, with the 50K minimum or $50 minimum to play that hand of blackjack, you're playing the $10 hand. You're still playing blackjack, which is their
You're
minimum
still at the same
$10.
table. You're
Still at the
just
same
10 bucks
table.
instead of 50 bucks. Got it.
Exactly.
Okay, so walk me through how you started your club and what kind of deals you guys have done and what does the club look like?
Yeah, so we started the club last spring, and basically I reached out, like I mentioned, to just family and friends that either were investing or had an interest in investing, or maybe didn't know if they had a clue at all, but just reached out and asked them, if they were interested in doing something like this and joining a club where we're group investing and putting our funds together to deploy capital. And so types of deals that we've done, we look at pretty much the gamut of real estate asset classes. So whether it's multifamily, land deals, both new development on the equity side as well as on the debt side. So we've done some loans as well. So debt, equity, industrial. I like real estate funds. So I like, where your capital is tied to a bunch of different assets as opposed to a single asset. So we'll do both funds and single asset properties. And anything that really comes across the desk that we kind of do our due diligence on, it kind of starts with me as the founder and the leader of the club. And, does it pass the sniff test as far as with the operator itself? And so evaluating who's the syndicator, who's going to be the general partner that's running the deal, and kind of evaluating them. And then also the market, or what kind of asset class is it? Is it something that we want to do? And we bring that to the club and we discuss it. We have a call amongst ourselves. Sometimes we'll invite the operator on the call to, just spitfire questions back and forth and get an understanding of, what they do and how they do it. And if they would be good stewards of our capital, and if they're a good partner to partner up with to go in on their deal. And so that's what we do on our club calls, is talk about that kind of stuff and doing our own due diligence and research and kind of seeing if this is, where we want to deploy our capital to. Maybe if it's an ant farm out in Minnesota, maybe we might not want to do it. But if it's orchards in Florida, maybe so. So we all kind of talk about it, and each individual makes their decision if they want to tie their money to that particular deal.
Sounds like a really good idea and a logistical nightmare to me, just off the top of my head, because correct me if I'm wrong, you started it. I'm going to assume that out of the group, how many people do you have in the group at the moment?
Currently, we have about 12, 13 members.
Okay. So you got a dozen members, give or take. I'm going to assume you're the leader. Probably you're the one that knows the most about real estate because you've been an active real estate investor yourself for a while. So trying to get a dozen people to agree on anything is a challenge at the best of times. How do you kind of manage that? And do you have deals fall through because not enough people want to contribute enough money to make it a go? Those are a couple of questions. And before I forget, the other question is, okay, you get a deal and you got 5 or 6 people involved in that. How do you get into that syndication under how do you pool your money together so you all go in there and you're all protected?
Yeah. Well, to your first question, that's really the beauty of the club is that you don't have to invest in any single deal. It's your choice. So we all get on the
Mhm.
call and we talk about the deal and discuss it and ask questions. And those that want to be a part of that deal will fill out a commitment form that says that they want to be a part of that deal. So if we have, say a dozen members and only 4 want to be a part of that deal, as long as we pool enough to meet the minimum investment for that deal amongst those 4 people, then we do the deal. If not enough people want to be a part of that deal or don't commit enough capital to be a part of that deal, then we move on to the next deal. And so
Got it.
it's you. Do you want to do it? Yes or no? The answer will be different for each individual person. And so that's one way. So if we don't raise enough or not enough capital commitments, or not enough people want to do it, then we move on. And that wasn't the
So,
most popular
okay,
deal.
that makes sense. So now let's say you got 5 people that do want to do the deal. They've got
Yep.
enough capital together. How do you do the deal?
So then we form an LLC to invest in the deal. So
Got it.
then those people will be members of that LLC and then we'll invest in that deal together. So for those people that want to do those deals.
Now, from a legality side of things, and I caveat here, I'm not a lawyer nor a securities expert nor anything like that. I'm just spouting off my understanding of things. So correct me if I'm probably wrong, Terry. But so some of these syndications are 506B type syndications, others are 506C type syndications, etc. So what kind of deals are you guys going into, and how are you qualifying for these as an accredited investor, if you are?
Yep. So both. So we definitely look for both accredited and non-accredited deals. And so on the non-accredited ones, it's pretty simple. We form the LLC and we'll invest that way. And or the accredited deals, just the accredited investors will invest in that deal. And so that entity will be the investing entity. Just the accredited investors will invest in
So
that
you've
deal.
got some of the members of your pool of your club are accredited investors. They're the only ones that can have dibs on those kind of accredited investor deals, even though they're pulling together less than the minimum amount required each and opening up the LLC. That's how you're doing that.
Yes, twofold. So yes, so we have those that are accredited that are just some are accredited, some are not. So those that are accredited can do those accredited investor deals. They can do it with the club, or they can go direct and put up the 50K themselves or whatever if they
Mhm.
like to do those deals. But then also we have an entity that's accredited, and so we have what we call a nominee agreement, where it's just a paperwork that we do with members. So to pool capital in to do that deal. And so where we have accredited investor entity that will invest in that deal, it's still the same format where each person makes a decision if they want to do that deal in particular or not. And if they do, then through a nominee agreement, they're nominating the entity to be able to invest in that deal on their behalf into the accredited investor deal. So they're still making their own decisions on if they want to invest in that particular deal, whether it's accredited or non-accredited or not.
So for each deal, you're creating a separate limited liability company, a corporation. Is
Correct.
that correct?
Yes, an LLC.
Doesn't that take a big bite? The cost of setting all of that up, doesn't that take a big bite out of the returns on that investment?
Not really, because a lot of the investments that we look at are, for one, we're always seeking double-digit returns, so minimum
Mhm.
10%. But a lot of the deals that we look at, the projected, of course, projected IRR is anywhere from 15+%. And then when we look at the track record, a lot of times, they're coming back at 20, 30% IRR, and anywhere from 1.5 to 2 plus equity multiples and things like that. So while setting up and forming an LLC does have its some expense to it, it's minimal in the grand scheme of things. I mean, I've estimated each LLC maybe around $200,
Oh,
for
wow. Okay.
just
That's
for
not bad.
filing the LLC, and it's based on what state you're filing it in, et cetera. Filing the LLC and registered agent, and so really then every year you'll just have kind of like your annual filing report and fee, and it's minimal in the scheme of if you're putting growing $50,000 at 15-20%, and that's over the course of annualized over the course of say a 3 to 5 year deal or whatnot. So but the LLC setup cost is really pretty minimal, and it's kind of the cost of doing business, like with anything. If you're putting your rental property in an
Yeah.
LLC, you're still going to have the same thing. So we do it in a way to have it as minimal expenses and costs possible, just based on how we file it in the state that we file it in. So
What are
it's
your
really
goals
minimal.
moving ahead for your club and your pooled fund club?
Well, the goals right now are just a growing membership and growing engagement within the club. As the more people involved and the more that we have in the club, the more deals that we can do. Again, even at 10,000, not everyone has 10,000 every month or every quarter, even to deploy into investment capital, because this is your discretionary income, not the money that you're living off of. This is your investment capital. And so with that, if we have 100 members in the club, there maybe it'll just be 10% of them that can do a deal in Q1, and another 10 or 20% that can do a deal in Q2. So the goal right now is just growing membership in the club, because the more members that we have, the more deals consistently that we can do, and then also the bigger dollar amounts that we can do into different deals, and higher investment capital that you commit. A lot of times the sponsors will give you higher return or bump you up into different preferred equity categories and things like that, and different classes that you can get higher returns. So maybe say $250,000, will bump you up to an 80-20 split as opposed to a 70-30 split, or bump you up to a 17% IRR versus their say Class A at 15% IRR. So there's a lot of benefits with being a larger group, where you can do a lot more deals, you can have a lot more consistency in deals, and get a lot higher returns and things like that, and maybe negotiate different things and more favorable for the members.
So Terra, as we're wrapping up our interview here, knowing what you know now, if you were going back a year and restarting this whole club and this whole fund and that sort of thing, what, if anything, would you do perhaps differently?
Ooh, that's a tough one. If I was restarting it again, what would I do differently? Um, I'd probably speak to a lot more people initially. I kind of just spoke to, some of our inner circle, close family and friends, but what I'm doing now and just blasting out to any and everyone who will listen to me, I probably would have did that a year ago and started, jabbing my jaws a lot sooner, and just telling any and everybody, and just letting the world know that there's something out there like this for them, where they may think it's just the traditional way of going about it, or you have to be ultra rich, in order to do a lot of these, private placement and private equity deals, or you've got to save up and have 50 grand, to get started or whatnot. And that's just not the case. So I would probably, have talked a lot sooner, to let people know that there are options and alternatives, and just with the way that the world's changing, there's a lot more opportunity out there for you to get involved in and get invested into real estate, other than the traditional methods that everyone's probably always heard about or known, or just think it's kind of for those wealthy folks or institutions or the BlackRocks of the world that are managing, I don't know, pension funds and hedge funds or whatnot, that just have everybody's money that they could use to invest. So I that's probably one thing I definitely say I would have done different, is start talking a lot sooner. And not just.
Well, you know what? It's not necessarily a bad thing, because a lot of times people want to see a little bit of proof of concept first. A lot of people are very, very nervous about being the pioneers in anything.
Yeah.
So the fact that you've got now a year under your belt, you've got a dozen people in there, especially when you start seeing some returns from some of those initial investments, then that's a great opportunity to get some of your current club members to refer the club to their friends and their family as well. Nice organic way to grow. And then we got a little bit of a track record. Then, like now, this is a perfect time to actually start talking more about it. So I don't think you necessarily did that wrong. I think once you get a little bit of a track record going, it's much easier to get that momentum going too.
Right.
Yeah. Awesome, Terra. So if people want to connect with you and find out more about what you're up to with your club, where should they go?
They can visit powerpoolfund.com. That's our website, and they can go on there and they can schedule to book a call. They can learn more about the club, what we do and how we do it, and really read all about how there's truly power in pooling our funds.
And they don't need to be an accredited investor to do that, correct?
You do not need to be an accredited investor.
Fantastic.
No.
Terra, this has been a lot of fun. Thanks for sharing your time.
Awesome. Thanks for having me, Dave.
All right, everybody. Take care. See you on the next one. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewyou.com. Now at moneypartnerformula.com, we help real estate investors to create a process for predictably getting capital so they can do more deals without relying on hard money lenders or the banks. We do this by building them a private capital marketing system. Now, if you want help turning yourself into a big money capital attraction machine, then book a call with our team to see how we can help. Just visit moneypartnerformula.com to find out more. All right, take care, and we'll see you on the next interview.